And take just a second, guys. YouTube went a little goopy, so I have to manually do it. We're getting there. All right. Good morning. Good morning, everybody. Hump day. Yay. Y'all need to wake up. All right. So we're mostly green around the world. UK kind of flat. China, Japan up around 0.5%. Doing better really than everything else except the NASDAQ. We're still in wait mode. Market's not really wanting to put a lot into speculation in front of a potential government reopening. Got a lot of Fed speakers chipping their teeth, not really expecting any of them to contribute, to say anything useful or interesting. We got the 10-year today. I know these auctions, they don't really get a lot of love, but I pay particular attention to them whenever we got an auction coming in. It is worth your effort, right? I think the reason it's at 2 o'clock is because it was supposed to be yesterday, but the bond market was closed yesterday. It's not normally at 2 o'clock. I just checked the time to make sure that it wasn't on my end. It's not. So it's just going to be a little weird. These guys this afternoon, they could say something that we're not expecting, right? There's always the gotcha moment. Some reporter could misquote them, ask them a question out of left field and get a silly response. You never know, right? You always want to be mindful of the fact that things can go wrong. So even though we're not expecting anything today from any of these guys, be mindful that they are talking and that it only takes one incident, right? And I've certainly felt the effects of that when I've thought, oh, they're not going to say anything. And well, then they get you with one of those gotcha moments and the market makes a move that nobody was expecting. So just don't be complacent whenever we have Fed speakers talking. But you can also go in and you can check because, if there's no Q&A, if it was pre-recorded, then a lot of that risk is removed, right? Or if they are, say, meeting with the Boy Scouts of America or the Girl Scouts of America, something like that, there's really not an expectation that it's going to shake the market. So, you know, just because we see that they're going to be talking doesn't mean we have to sit on our hands or sit out and wait. You can dig deeper, find out where they are speaking, and then go from there. Sometimes it's not even live, so it doesn't matter. Yeah, the headline here pretty much wraps it up. Tech rebound and shutdown optimism lifts global stocks. I mean, that's it in a nutshell. The problem is if it doesn't go through today, because we're going to run that vote, and what happens if it doesn't go through, right? Market's going to throw a little bit of a temper tantrum. We could see a downgrade to the U.S. credit rating, and we could still see that downgrade anyways. It's the one thing I've been holding out as the carrot and the stick is at some point, one of these three credit agencies are going to downgrade on, and it's the threat that they've been offering, right? Over the years, they have threatened it before, saying that our government can't work to get anything done. It's a broken system. And they threaten a credit downgrade if our government doesn't get things done. Well, I mean, shutting the whole system down really sounds like they didn't get stuff done. So we still have that threat, even if they get it back up and running. And that'll certainly cause markets some chaos. All right. So other than that, it's just another Wednesday. Take a look at the daily chart. The conversation that we've been having over this situation is exactly like it was yesterday, basically. We didn't pull back far enough, so this did not become a lower high, and we're on the way up. So we don't have nothing yet, right? We have this low and we have that high, and we don't have anything new. And we need to get out of this box, GTFO. Now, the problem is we can stay in this box for the rest of the year, right? Price can do whatever it wants, and it doesn't owe us a rally. I was looking for a TRB, which would have gotten us back all the way to the highs, right? It would have. That's what a TRB is designed to do, but we didn't get that. So that one single candle that makes TRBs so awesome is off the table, but we're still working our way up. We not only have to get back up here, we've got to get through this zone and then get above it and maybe even pull back against it like a Busby. But at the moment, we just don't have anything more than what we had the other day. Now, it does owe us that much. 69.32 cog line. After that, we'll have to run it on borrowed time, I guess. We're above all the major moving averages, and we have a surge signal. Surge signal is when price crosses through the 3 and the 10, and then it drags the 3 through the 10 to the upside. So this is a bull surge. If it happened the other way around, it would be a bear surge. So we have surge, trend, momentum, and strength. That's how they all line out. To get back into that 69.32 cog line, we're going to have to get through the call wall. That's at 69.24. We've got 68.71 level right here. It's another spot gamma level, one of those dual levels. So if we fade back into yesterday afternoon's price action, we're likely to retest that 68.71. Underneath that, then we have the 3, the 10, the 20, the volatility trigger at the 20, 0 gamma, and then far below this, the 10-week, and then the put wall. So far away, it's not even relevant. It's at 65.11 cog line. So 400 points. What's 400 points among friends, right? So far, we are inside day breakout after a nice Busby at midnight. We're running a little bit of a zipper at this point. It's only a little one, but we'll see if it grows through the morning. The zipper is what I finally came up with as a term for dancing above and below the VWAP. But I mean, it doesn't have to be VWAP. It could be anything else. Any line. So a moving average, yesterday's high, yesterday's low. If you're getting equidistant reciprocal price action, a lot of really big words early this morning. What you're getting above, you're getting below, and you're running this sort of thing, that's the zipper. We're just getting into it now, but we want to see what it's going to do. A lot of times, it'll start to expand into a megaphone pattern to where it just widens out a little more and a little more until finally something breaks. Other times, it'll stay solid on one end, and then it'll get deeper, something like that. So we just got to see how it's going to play out. But rummaging around the VWAP right now, we can't do anything else until these two levels are broken. So while you could, mark out the entirety of the Globex, this is the box that matters right now. Outside of that, then we get all of the Globex. Then we get all of yesterday. GTFO. To the downside, we've got a lot of levels to hit. To the upside, we basically have the call wall. While we're at it, may as well just take a look at yesterday's 111 and 1236, which is by far my favorite trade. All right, so I just marked out yesterday's levels. And you can see that we exceeded those. So we're done with yesterday's 111 and 1236. And we didn't make it to the half. I was curious if we actually made it up there or not. Nope. So as long as we're maintaining this breakout outside of yesterday's range, then we're good. We want to keep looking for more to the upside. Unfortunately, we could just stay in this little range for the rest of the day. I'm not expecting that, especially with the vote in the House and the possibility of the government reopening today. So I'm really not expecting that we stay in this range, but we could, right? And if we keep the breakout and we stay in this range, then tomorrow we could just continue this advancement to the upside. But if we break back inside yesterday's candle, then it's game on. And I will be looking for some opportunities to the downside. Start with the half back of yesterday, and then getting back down to the 10-day and through the 10-day into that 20-period moving average, which is the half back of Monday. Love it when things just line up together like that. And that would be for today, right? I wouldn't be looking to go this far by the end of the week. I would be looking for that today. If we get through the 20 today, I want that gap close. I know opening the government is supposed to be positive, but buy the rumor, sell the news comes to mind. And when it's all said and done at the end of the day, I just trade my levels anyways. So if if we start breaking down, we know where we're headed, level by level by level. And when you have a destination, you can continue to be nimble and get in and out as it works towards your target. We're 113 points away from the zero gamma line. That is also where we opened Sunday night in that gap. We could easily go 113 points, right? That's nothing. And if we go that far, we're going to get that gap closed. So that's the plan. On the other side of things, since we're talking about this distance to the downside and being bearish, we may as well offer the bullish bias. What if we get wildly bullish today? Then we get back to the previous high and we will expect the 111 and the 1236. So we're looking at 7,025 as the stopping point for an OCC, opposite candle color. Just a wee bit, huh? Today. If we that's the wildly bullish case, and the wildly bearish case would be getting this gap closed. Otherwise, the expectation is we're just going to hold the line here inside of that range and look for more tomorrow so that we can be back up here by the end of the week. We are closer to the upper ADR than we are the lower one, which implies that we could go on up there and hit it. It doesn't owe us that. And if we get there, we want to see if we actually hang out around that level or if we immediately start to retrace and come back the other direction. If we can get on top of it, it's likely to act supportive through the rest of the day, and we could stay above it without really expanding much more to the upside. But the phrase that we say, if we get there early enough, we could go to the other side by the end of the day, that doesn't fit now because it's already been too long, right? If we wanted to see that, we would have already been there. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it, but that's also bullish. You could see price yesterday running off of that floor pivot. That's why it's worth having these levels around, right? Just to better understand what price is doing or why price is behaving a certain way. I don't like to leave these lines on my chart all day. That's why I have it saved the way that I do, so that I can just jump through the charts, see what I want to see, and then go back to my regular chart. Can you imagine having all of these indicators all on one screen? Oh, that would just be madness. 68.61 is the floor pivot today. It's quite a ways off, but I'm more concerned with how far away we are from the weekly pivot. Now it's not 2% yet. If we get beyond 2 and say we get into like 2.5%, I'm going to be much more nervous about that weekly pivot point. Especially if next week we open a long ways away like this, those are the weeks where it's more likely we're going to get a reversal. Can you imagine opening on a Monday morning that far away and then it tries to go even higher? Right? We don't really have much left to run on the week when we get those kind of opens. But it's not Monday. It doesn't matter. It's Wednesday. Keep your eye on that distance. If we get above, say, 2.5%, then we're getting a little ahead of ourselves on the week. And it's at risk of pulling back simply because it got too far away from that weekly pivot. We already made R1 and we're hovering here. This isn't a good sign when you are hanging out at R1 or any of them, right? It could have been S1, wouldn't matter either side. It's supposed to get there and reject or get there and get above it. When we're running this sort of zipper play, we're just running back and forth above it and below it. It's not helpful and it's not doing what it's supposed to do. Now, part of that is because we're waiting on something, all right? They're waiting on this vote today. So it makes sense that we're not seeing commitment and yet we're also not seeing a sell-off. That's what we want to see change at this point, right? GTFO, we got to get out of the box and we want to expand away from that R line. Now to the upside, we've got R2 and then eventually we've got R3 way up there. But what I'm reminded of is R1, S2, and S2 is way down here, 6811 cog line. R1, S2 is right out of the playbook, right? It's if you were to study the floor pivots and the floor pivot additional levels, that's what they teach in the books is the R1, S2. So it's not guaranteed. It doesn't owe us that. But if we fail to get above R1 and can't maintain it, then we run it to the downside level by level. We get to the floor pivot and then S1. If we get through S1, then we get to S2. We've got a really nice distribution building out on the week. We are in this area back here and this point of control here. So if we can get above this zone, that's going to be fantastic, right? We got to get there and we're in it. So therein lies the problem. Get above that level so that we can check it like a Busby. Old resistance becomes new support and see what we can do with it after that. Otherwise, if we can't get above it, look for it to break out of the bottom and then the targets become the point of control, the value area low, the gap close. Simple enough, right? Level by level. Ten-day, 30-minute volume profile and TPO. We're taking that volume off the table like we were talking about yesterday. We're going to clear that high. So by the end of the week, it should be like this. It's narrower unless we break out and we get some new footprints up here, right? If we put in some new candles over here on the right, then we're going to keep this spread. The new point of control, like we were talking about, is very likely going to become 6820. Having that underneath us the way it is right now, fantastic. But if we break down and we get below that 6820, I think it's going to be hard to get back above that level. So we want to keep above it. It is our downside target. With that much old liquidity on the table, past trades, footprints, whatever you want to call it, that's the target on the breakdown, right? We get through the 10-day point of control, and then we run the 50, 68.50. Then that 68.11 cog line, 6800, 67.92, on down, down, level by level. All right, the VPOC that we built from November 3rd got hit last night. You could leave it on all day today. There's no reason to take it off because it was one that we've had on the books. It's not like looking at yesterday's and saying, well, I'm going to build a point of control here, which the textbooks would tell you to do that. So I'm going to leave 84 on the books for today since we hit it today. I'll end up taking it off tomorrow. We don't have a new one because we've already run through that level and we spent like a half hour hanging out there. So no new VPOC, and I'm going to leave 84 on until tomorrow. We're less than 1% above the 10-day, so it's still good, healthy. We haven't run too far, too fast. It doesn't owe us any sort of pullback or mean reversion. And we are outside of the weekly expected move, but we're supposed to close inside the box by the end of the week. That doesn't mean that we can't spend a day or so outside of the box trying to, just get as much as we could get out of it. So, keep that line in the sand on your radar, 68.77. That's the edge of the weekly expected move. If we start fading, it's basically Tuesday's high, right? If you want to just get some easy numbers to mark out on your chart, it's Tuesday's high. So if we fail our inside day breakout and get back inside of Tuesday's range, then we're back inside the box and we just have to keep it. It would still be a bullish close for the week, right? If we close inside the box, but in the upper part of this box, then it's still going to be considered a bullish week, a recovery week. But this run up, looking at it on the daily chart, we're not overbought. We're not overextended. We have not run too far, too fast, and it does not owe us a pullback. Looking at the weekly, we're 2.5% above the 10-week, and we don't know yet if we're going to keep this lower high that we've been getting, or if this is finally going to be the one that breaks to the upside and changes this around. I would find that pretty telling, right? Because I've been saying for a while now, I'm not bearish. We can be neutral or neutral bullish and still not be bearish, right? So I don't know if we're going to break into all-time highs and continue to go up, but I don't see a 2022 bear market staring us in the face. I just don't. So if we get that new high here, that's going to be more bullish bias. And sure, there's a lot of reasons to think that we can go down. A lot of reasons. But it's not the first time we've had a lot of reasons and we just keep going up anyways. It's pretty much been that way since April. There's been a lot of reasons why we shouldn't be long. And yet being long continues to work. The plunge protection team is alive and well. All right, so looking at what's down this morning, the VIX is down. That's a short list. Looking at what's up this morning, gold miners are not yet there. They're working on it, or at least the junior miners. We want them up at least 0.5%, and they're just not there. China's Mag 7, bots, China again, generic tech, uranium, chips, Mag 7, Bitcoin, more Bitcoin, China again. So a lot of risk on assets, right? Bitcoin itself is like the poster child for risk. This is everything we need for a rally day. Now, I'm not saying we're going to get a rally day, but in the morning when I'm going through the list, seeing what sectors are up and then focusing on the risk on sectors is the whole point. Trying to gauge what is it that we're supposed to do today. Is it supposed to be a rally day, a breakout day? If you look at these top 3 sectors, those are the sectors you want up in a rally day. Financials, technology, consumer discretionary. But that's not all of it, right? Because we could swap tech out and we could say chips, cloud computing, social media, and search engines. It could be so much more than just tech, generically tech. But all of those categories fit. And then utilities, it's supposed to be staples. But because of the data centers and the hunger for energy, utilities is actually a part of that group across the top now. So if we're going to see a capital rotation back out of, say, healthcare and staples and back into things like finance, tech, consumer discretionary, then we're going to see that growth versus value rotation. And we have the capacity for a rally day. We've certainly got the right sectors. Now we just need the fuel to get it done. But why would they come in and put all that money at risk in front of a government vote? Right? So keep your eye on the clock, get that vote through the House, see if it actually gets through the House or not, and then see what the market's reaction is afterwards. And be very careful of buy the rumor, sell the news. I know it would seem like if they open the government, it's going to be crazy bullish. Just keep in mind what we expect isn't always what we get, right? If all of this is going to unravel and we don't get our rally day today, look for it to start to happen within the sectors first. I mean, you could get it individually, probably within just the Mag 7 itself. But look and see if we start to lose specific sectors like chips or cloud computing. Even just that MAGS ETF, right? Which is a fantastic way of keeping track of the Mag 7. It's MAGS, MAGS. Just use that, right? Simple, easy. If the chart is a little ugly, then just turn it into a line. No problem, right? Use it like an indicator because, we don't need to trade it. Just keep your eye on it. If we start to lose this, then we're losing the Mag 7, and we cannot rally without the Mag 7. I suppose technically 0-day flows could do it within the options market within just the S&P, but that would rally the Mag 7. So kind of a catch-22, right? We would still get the Mag 7 pushed. So that's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow. Watch the clock.